Hello, good day. My name is Hussein and I'm Forex Optimum Broker Financial Analyst. I'm back again to bring you all some of the updates in the financial markets that are going to give you some clue what's going on within this week. Stock markets are suffering continuous pressure from rising Treasuries yield that soared above 1.58% on 10-year T-bonds on Thursday as rising inflation expectations are mounting. A 13-month high in yields returned the market in the beginning of 2020 just before the COVID-19 pandemic broke out. Should we expect another plunge in the stock market, or we saw March last year? We shall see how the situation is evolving at the moment. For the moment, the US technological sectors suffered the most. Nasdaq 100 lost more than 3% this week, while Dow Jones Industrial Average kept its gain at 1.5%, and S&P 500 is struggling to return to 3,900 level, where it has started this week. Incredibly, high multipliers in technology giants evaluation together with expected decline in demand for online services and orders aim significant improvement in the pandemic situation worldwide undermines technology giants fundamentals. It seems investors are convinced in rising economic recovery and are betting on a cyclical goods and assets. This is why we witnessed the rise of the industrial Dow Jones average that we saw, breathtaking climb of copper and also crude prices and strengthening of export commodities dependent currencies by 2 to 3% this week alone. However, such optimism could be too much, I would say premature and excessive, as macroeconomic data doesn't confirm it to so far. So, moreover, global growth is declining for the last 6 consecutive weeks. So, more prudent investors prefer wait and see tactics until the situation becomes more clearer. And it may turn more possible in the few weeks with S&P 500 broad market index completing to form a reversal pattern. So, a downside target for S&P 500 at 3,810 points may be reached by the end of the trading day. Crude prices broke through resistance levels with Brent crude steady above $65 per barrel. However, this upside spike seems more unstable and slowing down global economy and rising crude reserves in the United States. Energy Information Administration reported on Wednesday crude reserves were up by 1.3 million barrels and also in Texas, the weather is returning to its season's average normal and crude production gradually recovers. So from a fundamental point of view, a return to $65 per barrel of Brent crude is seen more likely. Gold prices are guiding by rising Treasuries yield. So if yields continue to rise, we may see the prices may drop to somewhere around the resistance zone of 1780 to 1800 per troy ounce, with next targets at 1650 to 1700 per troy ounce. The US dollar has retreated on FX market, clearing the path for the euro to climb to 1.23 level mark. If this target would be achieved, it will be a good signal for selling position. Last but not the least, British pound surrendered, plummeting below about 1.4020 level. Any prices below 1.41 to 1.4160 after technical confirmation of the downside move might be considered. The Japanese yen is trying to break through its highs at 106.2 level. If it succeeds, we may witness a true flash crash of the Japanese currency, as the next resistance level for USD JPY is at 110.50 only. A buy position after technical confirmation of the upside movement in the pair would be a reasonable scenario. That's all for the day. Thank you very much for listening. Have a great weekend ahead. Bye-bye.